Now let's talk about the energy trade. Wells Fargo making a bullish call on Chevron, saying shares have 30% upside from here. It is our call of the day, and Bill, you actually own Chevron.
Yeah, it's right outside our top five. If you take a look at the resource life of these wells that are out there, over the last decade, because of underinvestment, they've halved. And you know what? The world is demanding more and more oil as time goes. So I love that Chevron is in a great position right here. I mean, the company had a solid earnings report outside the fact that oil prices were lower in the prior quarter, but I think oil prices will be higher. So I think that's going to be a tailwind. We increased Chevron recently. It's right outside our top five. We increased Pioneer Natural Resources, which I think has terrific spot with low-cost Permian assets, because you're seeing Permian being a real place where that production's picking up.
Steve, I mean, is the oil and gas complex something that you're even contemplating right now? If so, why? If not, why not?
So I do contemplate it all the time. It's just not a sector that I think is prone to solid analysis, right? You've got a couple of outsized parties, which are OPEC and OPEC Plus, that really drive it, and it's by their whim. Do they cheat? Do they not cheat? What's demand? Is China going to open? Is it not going to open? So I prefer to play where there's sustainable demand that's actually growing, and that's in Freeport. So I think energy is always a trade. I don't view it as a long-term investment. I think the stock charts really bear that out.
And Shannon, I'd like to get your thoughts here. Do you feel as though it's attractive energy or not attractive at these levels?
Well, we're still posting in the sector, Dom, negative year-over-year earnings for this sector. I think that the thing that to remember is, again, I touched on it earlier, but this undersupply of the market. We actually got a little bit more supply this year than we were anticipating if you cobbled together from all of the different sources, and that was primarily from non-OPEC plus members that we saw a little bit more supply onto the market. That next year could come down a bit. And so our team has taken a look at this, and they have indicated that we could see lower supply in 2024, particularly here in the United States in terms of our supply into the market. And so if you base your expectations for energy stocks on energy prices, which have very strongly correlated over time, then that undersupply could create an opportunity next year, particularly if economic growth continues to point to a stronger outcome next year than was expected in the last couple of months.